at 0.5 to 1.0 or minus 0.5 to minus 1.0. That way it's a negative correlation. Unfortunately, if we look at gold against Bitcoin, the correlation is all over the shop, isn't it? This is the correlation coefficient on a 1 hour chart. You'll see that, yes, it nearly always spends the time in the positive, but there are so many times that it spends the time in the negative. It's quite significant. So when we look at this as a correlation coefficient, can you tell me with 100% certainty that it's positive or negative? What would your answer be? Is the correlation positive or negative for Bitcoin? Well, it's very negative when it's here, isn't it? It's very negative during this period here. And it's very positive during this period here. So you can see it's predominantly positive. It's predominantly positive, but it's almost as much negative, but not quite. So as a correlation, it's really, really quite poor. And this is how we go about a study, because when you look at the correlation of gold against Bitcoin, for example, here, what we can now do is try and compare that to, if I change the settings to this, instead of using Bitcoin, if I change the settings, for example, to bonds, and we look at gold against bonds, and we see whether that's positive or negative, we can see that it's a lot more positive, isn't it? So gold against bonds spends most of its time, a significant amount of its time, as a strong positive correlation against bonds. So we're already starting to recognize what a very good correlation looks like compared to a very poor correlation. Now let's look at gold against silver. So we'll take bonds out of it and we'll put silver into the markets, because obviously we're now expecting this to be even better still, aren't we? So we want to know what it looks like. We want to know what better still looks like. Now this is interesting, because I've used the wrong silver again, guys. That wasn't silver. That's that stupid Russian thing again. My mistake. Sometimes, guys, you've got to be careful. Make sure when you're clicking on silver futures, you don't end up with the ruble. So when you look at silver, do you see the difference? Do you see the difference, Paul? Now that is a correlation. That is what we call a correlation, guys. That is a strong, strong storyline. And now we can understand these, because anytime this storyline breaks below these is a trade opportunity. Every time it breaks below this level here, it's a trade for us, isn't it, on gold? So I know there's a gold-silver trade here. I know there's a gold-silver trade here. I know there's a trade here. I know there's a trade here. I know there's a trade here. So we're getting a lot of these stories, a lot of these opportunities, and they are very, very short-lived. And that's what you're trying to find. You're trying to find those short-lived opportunities. Make sense, Paul? So I'm not saying it isn't. I'm just saying it's not tight. There is a difference, isn't there? It's not the tightest relationship. This is an hourly chart on gold. So this is gold on an hourly chart against silver.